We're already into 2012 and the cattle markets are looking pretty not bad. Derrell Peel, why is that happening?
You know, so far it's a little early in the year to really have a sense of market trends, but all the markets that we've seen so far, the trading are at higher levels. All the cattle prices are generally higher. Box beef is higher. So we're off to a very strong start, pretty much as expected this year.
Are they going to stay like this all year?
You know, I think our general expectations for this year are for stronger markets. Most cattle prices and beef prices set new record average levels in 2011, and yet we expect to push even higher in 2012. We're looking for, on an annual basis, about a 4% decrease in total beef production. Cattle inventories, of course, have been getting smaller for a number of years. They're going to be even tighter in 2012. And, you know, depending on whether we have continued drought and some other things will determine exactly how it plays out. But the bottom line is we're looking for decreased production, small cattle inventories, and higher prices in the new year.
So really, there's a lot of variables that could go into this. Let's talk about some of those variables that the cattle industry needs to watch.
Well, you know, I think the industry itself has very strong fundamentals, as we just mentioned, with tight numbers. At the same time, obviously, we're dependent on a lot of external factors. You know, there's still some concern about the U.S. economy in a general sense. We're looking for relatively modest growth rates in the U.S. and in most other major developed and developing countries around the world. There's just a little bit of sluggishness around the world. Certainly, we have some specific concerns in Europe and other places. So those factors directly and indirectly could affect the cattle markets, but short of a major macroeconomic problem, the U.S. cattle industry is in very good shape for 2012.
Okay, but there's also still some opportunities for 2012 also.
Well, again, we're looking for higher prices, so I think from a producer standpoint, 2012, you don't worry so much about markets and prices and whether you're going to sell animals at a good price. I think your challenges come from the production side. You've got lots of opportunity. The markets are going to be in good shape. I think it's a question of managing production, managing the cost of production, because obviously input markets will also be higher and more volatile, and so those will be the challenges for producers, but there is profit potential, certainly at the cow-calf and stocker level. Feedlot sector, because it's a margin operation, and the packing sector, and all the way up to the retail will feel more of a squeeze because we have a tendency for higher prices from below and some limitations on prices from above.
And Derrell, a lot of Oklahoma producers are kind of wondering, what if the drought persists into 2012?
Well, obviously, it's very much a concern right now. If the drought persists, obviously it will have tremendous impacts on those producers directly affected here in the southern plains. In fact, the general forecast is that drought might even expand a bit into the southeast and some other regions. So that will have the impacts on those producers. We'll see additional culling of animals out of this region. It could have impacts on the general market, and the impact would be to push us even lower in terms of cattle numbers, much like last year did, and so it would exaggerate to some extent the supply situation that we see that's already very tight and very supportive of prices.
Okay, thank you very much. Derrell Peel, Livestock Marketing Specialist here at Oklahoma State University.